Hi, and welcome to the Market Week in Review for the week ending the 11th of July, 2025. My name is Alex Cousley. I'm a senior portfolio manager based out of Sydney. And really this week, we saw another week of strength in equity markets. So US equities are back in near all-time highs or at all-time highs. And I think resilience remains the name of the game for the US economy. So this week, it's a fairly light week in terms of data, but we had continuing jobless claims and initial jobless claims that were actually a little bit better than expected. So less people filing for unemployment insurance. Then we also had the one big beautiful act that is now being passed by both the Senate and the House. And we think that's going to have a very modest uptick or a modest boost to economic growth in 2026. And one of the key elements of that we are closely looking at is the depreciation encouragement or the depreciation expense that is allowed for capital expenditure, and where that sees an increase in capital expenditure by US companies as we head into 2026. On the geopolitical front, we saw tariffs coming back into the headlines with Vietnam last week. So Trump putting 20% tariffs on Vietnam and 40% tariffs on transshipments. So exports that have come from China to Vietnam and then get sent across to the United States. To the extent that is able to be policed and monitored, that will be at 40%. And then this week we saw letters to Japan and South Korea highlighting that they've got to August 1st to come up with a deal. Otherwise, it will be 25% tariff rates. The market has largely looked through this. I think generally the view still remains that this is a negotiating tactic. The final one that we got was around Brazil. So the US have put a 50% tariff on Brazil, which seems to be driven by more political considerations rather than trade considerations. And that's a bit of a harder one to pull apart. But nevertheless, as we sit here today, we think recession risks are still high, a little bit higher than normal, but they have come down from the peaks that we saw around Liberation Day. The US economy has remained fairly resilient. Europe still looks pretty healthy, and China is stumbling along. The final bit that is kind of exciting to talk about as an Australian, we don't get to spend too much time talking about the Reserve Bank of Australia, but they actually surprised markets this week. So the market had fully priced in an interest rate cut from the RBA, and they actually held and kept rates steady. The reason for that is they would like a little bit more confidence that they have gotten to the point where inflation is sustainably within the 2 to 3% target range that the RBA are aiming for. They've already done a couple of rate cuts this year, and so they want to see how that flows through. I think I've discussed this in other videos before, but Australia's mortgage market is quite different to the United States. We do not have 30-year fixed rates. Most people have at most a 3-year fixed rate. And so interest rates have a pretty quick and a quick pass through to consumers. And so as we roll out the next 6 months, we'll start to get a sense of how those two interest rate cuts start to flow through to the broader economy. The other challenge that the RBA are grappling with is productivity growth has remained fairly soft in Australia. That's a theme that's kind of been fairly similar throughout the developed world, with the exception of the United States. And with wage growth running at 3.5% right now in Australia and productivity growth very minimal, that doesn't get us back towards comfortably within the inflation target. So they're the two things that the RBA is monitoring. As we look ahead to the rest of the year, we do think there's probably room for one more rate cut towards the back half of the year, maybe two if the economy more meaningfully slows or we see more pressure coming out of the Chinese economy. But for now, we think that there is probably room for one more rate cut towards the end of the year. So with that, I'll leave it there. Thank you very much for listening, and we look forward to speaking to you soon.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.